The roar from Exchange Alley is deafening. Men push and shove, their faces slick with sweat and desperation, clutching promissory notes like lifelines. A sudden, sharp cry cuts through the din as another investor collapses, his fortune vanishing in the maelstrom of plummeting shares. Panic seizes the crowded coffee houses. But to understand how it came to this moment of financial ruin, we must go back. We must peel back the layers of ambition and deceit that built a house of cards so grand, its fall reverberated for centuries. This story begins with a promise. It is England, the early 18th century. In 1711, the South Sea Company is born amidst grand promises. Its stated purpose: to trade in the lucrative, untapped markets of Spanish South America, a venture that captivated the public imagination. Britain was a nation eager for new wealth, recovering from costly wars and seeking financial stability. The company offered a seductive solution: convert the national debt into its shares. Promising immense returns, it seemed a secure, patriotic investment, but what no one truly realized was the audacious deception brewing beneath the surface. Early in 1720, the company's shares began their astonishing ascent. Fueled by aggressive marketing and public euphoria, their value climbed from around £128 in January to over £800 by July. Ordinary people poured their life savings into this seemingly unstoppable growth. Records reveal the company's true business was less about South American trade and more about financial engineering. It effectively created a market for its own stock, leveraging the public's eagerness. Directors actively manipulated prices through staged buying, painting a picture of relentless demand. Eyewitness accounts, like those found in contemporary pamphlets, describe the frenzied atmosphere. Everyone from the humblest servant to the highest nobleman sought to partake. The lure of quick riches proved irresistible, drawing in vast sums from across society. As the share price soared, public anxiety mounted amidst rising volatility. Other smaller, equally speculative, bubble companies sprang up, further inflating the market. Parliament, urged by the South Sea Company, passed the Bubble Act to suppress these rivals, but what no one truly understood was they were merely igniting the fuse on their own grand explosion. The bubble burst in late 1720. Shares plummeted, and fortunes evaporated overnight. Thousands faced bankruptcy and ruin, their dreams of prosperity shattered. Even Sir Isaac Newton, an early investor, lost a reported £20,000, observing, "I can calculate the motions of the heavenly bodies, but not the madness of people." The true scandal, however, ran far deeper than mere speculation. Official inquiries uncovered widespread corruption at the highest levels of government. Directors had secretly bribed ministers, members of parliament, and even members of the royal household to ensure legislative support. These were not isolated incidents but a systemic entanglement of power and greed. The government itself had been complicit, creating the very conditions for the bubble to inflate. The scale of this backroom dealing shocked a nation already reeling from economic devastation. The South Sea bubble became a searing lesson in financial hubris and governmental malfeasance. It fundamentally shook public trust in nascent financial markets and the political establishment. For decades, the mere mention of speculative investment conjured painful memories of widespread ruin. Yet, its echoes resonate with chilling familiarity even today. From the dot-com bust to the global financial crisis, the patterns of irrational exuberance, unchecked greed, and political complicity recur. The human desire for instant wealth often blinds us to the stark warnings of history. The South Sea bubble stands as a stark monument to the intoxicating power of illusion. While names and dates change, the fundamental forces that built and burst this extraordinary bubble remain timeless, forever lurking in the shadows of our financial aspirations. What price, then, are we truly willing to pay for the promise of limitless gain?